before lunch, I think it was the chap from Fire.com, Connor, who said exactly the same thing. In their business, what they're trying to do at the moment isn't about disrupting. It's not about bringing necessarily new things. It's about saying, how can they help? How can they drive advantage through the technology that they're bringing into the marketplace? So that's a kind of, for me, that's a bit of a theme, if you like, that sits behind what I'm going to talk about just now. So the market, a couple of words about the context of the market. Now, I knew John Breakfast was on the agenda today, and I thought, there's no way I'm going to try and outdate or outslide John Breakfast. So my view of the market looks like that. I think it says what it needs to say. It's pretty busy. I'm not saying which one of those wildebeests is me, but we're all trying to get our beak in the water. We're all trying to get our fair share of what's going on in the market. The thing about the competitive landscape in which we operate that I find very interesting, and it came up again today on a couple of levels, people talking about the funding gap, you know, where that funding gap is and how it manifests itself. And I always find that a very fascinating discussion, perhaps something we'll continue later in the bar, because I think it's a big discussion and a big topic. My theory is, if you, I don't know, are there many sales directors in the room today? Or is it all technical people? There's some sales directors. I think if you went round our industry and you asked every sales director in our industry what their number one challenge was, what the biggest challenge that they're facing is now, my guess is that they'd all say new business, levels of new business, finding new deals. And that's kind of curious when you think about it. How comfortably does that sit with this idea that, you know, out there's lots of this unsatisfied demand waiting for supply, and yet on the other side of that coin we've got all this supply that's looking for demand. Now, I don't know where the truth lies in that, but I think it's a very complex question, and something that I don't think can be distilled into a phrase like the funding gap. But not for today, perhaps for another time. The only slide I will bore you with is this one, and you've seen this in different manifestations already today. Kevin talked about the market and the size of the market, and John Breakfast a lot more detail on the size of the market across Europe. This is the UK market, and I think what this slide demonstrates very, very clearly to everybody is what we all know, that since 2006, when the market peaked in terms of client numbers and then fell off the end of the universe in 2008, like lots of other things, our market in customer numbers hasn't gone anywhere, just hasn't grown. Static at best, declining at worst. And the growth that we see in our industry, and we report it positively, as I think we should as an industry, because it's good growth and it's great to see and great to hear about. But that growth is driven by ever-increasing larger transactions. And it's boosted by the fact that ABL numbers are coming into the industry now and making those numbers look larger and better. But the reality is that finding deals in our market is difficult, and the market isn't growing. So there are lots and lots and lots of challenges out there. Now, back in 2000, lovely friend of mine, mentor, colleague for lots of years, a chap called David Hogg, and I set up a business called SME Invoice Finance. And back in 2000, when we looked at those market statistics, and we did a bit of a deeper dive than just the headline statistics, what we discovered even back then was that actually factoring in the UK had already slowed quite significantly, and invoice discounting was taking off. It was a very clear and a very obvious message from a marketing perspective. So we came to market with our offering, SME Invoice Finance, and our mandate really was to do two things. It was to try and provide confidential invoice discounting to small ticket businesses who weren't currently being served in that space at that particular moment in time. And the reason that, in large part, that they weren't being served, actually, I think, has got a lot to do with technology. So, you know, although I say a bit tongue-in-cheek, technology played a large part in SME Invoice Finance genesis, and I say that with my tongue-in-cheek because at the time we set the business up, I think between the two of us, neither of us could turn on a laptop, frankly, back then. But the fact is that if you looked at the industry back then, conventional wisdoms for most lenders, and bearing in mind the market was still massively dominated by the clearing banks, conventional wisdom dictated that unless you were a large company or a larger scale company, you would get factoring rather than invoice discounting. Why? Well, because if you weren't a larger business, Typically, you couldn't provide the lender with the type of management information, monthly accounting, cash flow forecasting, all the things that a lender needed to offer you invoice discounting on what they considered a safe basis. So as a consequence of that, the market was very much around factoring for small businesses, invoice discounting for large businesses. And it stayed that way for quite a long time. But of course, what the market had missed or had been unable to react to was technology. Technology at the time had already changed. And, you could walk in 2000, you could walk into your local Currys store. You could pick a laptop or a desktop off the shelf, take it home, pick up a bit of software. And, a small business, a one-man band could quite easily then recreate exactly the kind of data that probably only a few years before you had to have a mainframe computer to build. So technology is kind of, it's always been there, it's always been around in terms of changing our industry and being an important agent to change our industry. And I think over the last 15 years, 20 years perhaps, you'd have to be probably in hibernation to have missed the boom of the FinTech bubble. We've talked a lot about FinTech today, we've heard a lot about it, and there has been some interesting discussion around whether FinTech should actually be called FinTech or should it be more accurately called TechFin. Have the providers of the FinTech models or the original providers focus more time on technology than on the financial components of the products that they brought to market? And that's a kind of, it's a discussion or an argument that can polarize opinion. So maybe something to pick up in the bar later. I'm not necessarily going to go down that track right now. But certainly what you can say about FinTech and the advent of FinTech in our world is without a shadow of a doubt, what it's done is it's enabled us to change the view that we have of our landscape, change the view that we have of our customers. And I think the importance of the emergence of that group, if you like, or that segment in our lending brethren, if you will, has given the industry a bit of a kick in the pants. And frankly, as an industry, I think we are quite, or have been historically, quite conservative, quite stale, quite introspective in lots of ways. So I think, for me personally, I really, really, really welcome what FinTech has brought to the table. I'm not suggesting for a moment it's done everything right and the rest of the industry's got everything wrong. But FinTech has got a very, very, very important part to play. Now that said, it's certainly not the whole picture. And if you think about our market and what we do as lenders, my sense is that really it's as old as the hills. There's not a lot new in lending money to people. If you go back into ancient times, you'll probably find that the Romans were doing what we were doing quite effectively, quite efficiently. Before them, I suspect the Greeks were doing it. Before them, the Egyptians were probably doing it. So it's an old industry. There's lots and lots and lots of history and lots of reasons why conventions and conventional wisdoms persist. There are two things for me that stand out more than anything else in our industry as kind of, if you like, key factors and certainly key attributes in the growth or the pursuit of growth. Those two things are cash and customers. If you're going to grow a business in our market, you've got to have access to capital, and it's got to be at the right price, hopefully, to turn a profit. And you've got to have really strong distribution channels. And it's very difficult. I mean, I think we all, as an industry, we're very, very good at labels. We're very good at building language around what we do. We're good at new products. We're good at inventing sort of new ways of doing things. And tweaking on the margins, adding a whistle here, adding a bell there, wrapping it up in tinsel, wrapping it up in silver paper, etc. But at the end of the day, it's very difficult for me to think of, and I don't know if anybody else can think of, anything you can do to a financial product, a lending product, that doesn't either impact risk or price. For me, just about everything we do to a product will impact one of those two things. And it comes back again to this kind of, the thought process that I have around trying to decide where we're going to go and what we're going to do and how we're going to do it is always fundamentally about keeping it simple, because our business actually is fundamentally very, very simple. And it's complicated by lots of things around the edges, but at the end of the day, in its essence, it's actually a very, very straightforward process. So when we set up after SME, we sold that business and had a bit of time off, and then decided we were going to set up another one. The one thing I didn't want to do was to build another SME that was hopefully a very successful business, but it was a business that was right at its time. For me, the opportunity was to look at where is the industry going, what are the trends, what's the future opportunity, and can we build a business that actually is, we're not building in obsolescence, we're building in something that's got a place or going to have a place in the future. So for me, that meant absolutely aligning a lot of what we did with a technology component. And that's why I was delighted, really happy when we hooked up with Kevin and the guys at HPD, because our technology skills are somewhere next to zero. And having a strong technology partner, and the theme of partnerships come up a few times actually today, and I think it's a very important theme. Having a strong technology partner who knows what they do and what they're all about, I think for me was fundamentally important. So I remember the conversation with Kevin in the very early days. It's about sort of September, October 2015. And we set up ICS under a different name, under a private name, first of all, before it was sold to Investec. The conversation with Kevin was around, look, I want to really buy 3 or 4 of your current products, because this was in the pre-Lendscape days. We want to put them together and deploy them in a particular way to provide an end-to-end solution for the customer that meets a lot of the problems or faces a lot of the challenges that we believe customers face and don't like about the pre-existing products. And I think there's nothing particularly original about that. I go back to Mr. Scully's comment at the outset. We're not looking to reinvent anything. What we were looking to do was to take what was already there and see how could we use that to our best advantage. And that's exactly what we did. And fortunately, we said to Kevin, we want to be up and running in 8 weeks, I think. And we were. We set sail on 1st of November 2015, and we wrote our first client on the January 2016. And that was fundamentally because we partnered with a technology company who already had that technology in-house. We took it out of the box. And our objective wasn't to try and redesign it or recreate it or do anything special with it. It was just to use it, make it work for our customers, and then to learn for it and go on a journey with it, which is kind of where we are now. But that out-of-the-box approach is kind of easy when you start as a new start. You've got a blank sheet of paper. You haven't got legacy systems. You haven't got legacy clients. You haven't got legacy revenue, unfortunately, but it is a much easier thing to do at that stage. So you get those kind of opportunities every now and again, when you start something up. When you're trying to shift the axis of a business that's growing or trying to move from one place to another. And there are several examples, really good examples of companies in our industry who've deployed technology in a very clever, very interesting way. The difference, I think, or one of the differences between them and us, is I'm not sure, really sure, it's in their DNA. And what I mean by that is that when we set up ICS, we made technology an absolutely key part of who we were and what we did. And we said to ourselves, we want to do business this way. So as a consequence of that, we're at a 85% adoption rate at the moment on the Gemini product. So most of our customers, we use the product that extracts their data directly from their sales ledgers. It comes into our ledger, seamlessly integrates it, et cetera, et cetera. I'm not going to give you Kevin's sales pitch. But we use that product. And my ambition is to have 100% of our customers on that product. Not 85, not 90, 100. Because it's in our DNA. So we're not around the edges. We're not around the fringes of this thing. It's absolutely fundamental to what we do. I heard the phrase earlier, and it resonated with me again, and forgive me, I can't remember who said it. But it was about using technology as an enabler. And I agree with that, 100%, 1,000% agree with that. And what we tried to do was to use the technology that HPD have got to enable our clients to have a better journey. I've visited lots of conferences over lots of years and listened and sat in rooms and debated many, many times, what's wrong with our industry? Why can't we grow? Why can't we get more than 40,000 clients? Don't know what the answer to that is. I really don't. If I did, I wouldn't be standing here right now, that's for sure. But I think the reality is, it's open to all of us to really try and ensure that as we build new products out for our customers, we address a lot of the feedback that we've had, the negative feedback that we've had over the years. Somebody mentioned the Lloyd's TSB survey that was done. And in that survey, most of the feedback was around things like clients find our products far too complicated. They find them not, there's no transparency. They don't know what their availability is going to be from day to day. They don't know how much it's going to cost them, et cetera, et cetera, et cetera. So in using HPD's technology, what we try to do is to speak to those challenges and those problems. And in doing so, to produce a product offering that we really believe enhances our customers' lives, enhances their journey with us. Importantly, it's got the ability as well to reduce our risks because of the granularity of the information we get. It means that we've got a better oversight from a risk perspective. Our guys spend less time doing what I would call granular level work on the numbers. We can actually spend more time talking about things rather than actually digging into the numbers, which is a bit dull and a bit boring. And it has the benefit ultimately of being able to allow us hopefully to reduce the cost to our customers, because we're able to create an environment where risk is down and our operating costs are reduced as a result. One of the things, going back to SME for a second, that was absolutely critical to us, and again it was in Kevin's box that he displayed earlier, was lifetime value. It surprised me enormously. I don't know why it surprised me enormously, but it did. When we wrote the business model for SME, we sensitized it as you do when you're approaching private equity. They want to know what happens in this situation, what happens in that situation, what happens. So we had all manner of sensitivities, and most of which actually you either didn't know the answer because economic meltdown, what happens, who the hell knows, or interest rates, you can model what happens if the interest rate environment moves, and so on and so forth. The one thing that really, really, really leaped off the page at us, absolutely leaped off the page at us, was client life cycle. And given, my background wasn't actually factoring and invoice discounting, so I wasn't coming from a place where I knew this stuff, and maybe that's why it surprised me. But back then, I think the average life cycle was about 2.5 years tops, something like that, for a client. I'm not sure whether it's more or less now, to be brutally honest, but it was 2.5 years. What staggered me beyond belief was if you push that out to 3.5 years, and then maybe 4.5 years, and then maybe 5 years, there was an exponential rise in profitability, just off the scale. It was just that simple. So, the message there for us was really simple. Give customers what they want, which is cash. Choose the right ones that are going to stay with you for as long as possible. Look after them as well as you possibly can. And that's how you make money. And at the end of the day, I'm in this to make money, right? It's a commercial enterprise. I think it's a beautiful thing, helping customers and all the rest of it. But we serve a commercial reality at the end of the day. So I don't think that is I don't think that's an obscene kind of thing to do. And in fact, sometimes when I have that conversation with prospects, it always embarrasses a sales guy if I'm with them. I'll actually say to them, look, my model, frankly, is such that if you come with me, I'll give you the best service you'll ever get from anybody in our marketplace. And of course, they always say, well, everybody says that, John, why is your service better than anybody else's? And I say, well, let me tell you what my business model is. You stay with me for a year, I don't make any money. Stay with me for 2 years, I might break even. Stay with me for 3, I'm going to make a few quid. Stay with me for 5, I'm going to make a shit lot. Right? Now, if you were me, Mr. Customer, what would you do? I'll look after you, right? And as a consequence, whenever anybody tried to leave us at SME, we'd circle the wagons. I'd be in my car fast, and you can say chips to get down to see them, to try and keep them on board, because that's how important it is. So, simple things, but allied to technology, the technology component, I think, was fundamentally important in our ICS journey and allowing us to achieve that. It's not the only thing, however, in my opinion, and it is only my opinion. I'm passionate about technology, really passionate about technology, which for somebody of my age who's got kids who still have to work the telly for me is an interesting thing to say. But I am passionate about the use of technology in our business. I really, really, really believe in it. But I believe in this just as much, perhaps even more. And this whole idea that, we can serve customers in our environment without relationships, that just doesn't sit well with me at all. It really doesn't. And I know, at different segments of the market, certainly in terms of the cost structure and the cost to serve those clients, it may well be completely off the wall to pretend that we can serve customers in a way that you can serve other customers in other segments of the market. So that's fine. And everyone's got to have a commercial model that works. But for me, I suppose when I first started life as a lender, was with the God, I'm not old. It was called Midland Bank, if anyone can remember Midland Bank, 30 odd years ago. And my first boss was a manager, the branch manager. I still remember him now. He was called Mr. Blair. Everybody called him Mr. Blair. The staff, customers who came in called him Mr. Blair. We called him Lionel behind his back, to be fair, but that's another story. But Mr. Blair was an important person in the community. He was a guy that, he was a fulcrum. He was a fulcrum of knowledge. He was a fulcrum of activity. If customers needed something, they needed introduction, they needed an increase in their overdraft, they had a problem, they had a challenge, they would wheel into his office in their Sunday best and have a chat with him. Now, I'm not suggesting that we still need to hark back to that era, but there's a strata of people in the banking universe that don't exist anymore. They're not there. And I think the universe is a little bit the poorer as a result of that. Now, in a way, my ambition is to try and fill that gap a little bit if I can. That's what we try and do. We want to become that bank manager type person for our clients, because my experience of lending to entrepreneurs over 30 odd years is most of them don't want to talk to you every day. Some of them don't want to talk to you at all. But every now and again, when they've got a challenge, a problem, or an opportunity, they do want to talk to you. And when they want to talk to you, two things. Firstly, they want to know that you really understand what they're talking about and you understand their business. And secondly, they want to know that you can help them quickly, right? So that kind of combination of knowing your customers, understanding them, being the person they can talk to, the person they can trust, the person that can help them, for me, that absolutely underpins everything else. And that was really what we tried to encapsulate in our little vision for the business that we set up, which was this idea of high-tech, high-touch. So these things are both hugely important, technology and relationship. And it's nice to know that even in a world where we've got such high-powered technology like F1 racing, for example, every now and again you still need a little bloke to put the wheel nuts on your car and wipe your visor. Otherwise, you're going to get into trouble. So I think, where are we on that journey? By no means are we anywhere close to the end of that journey, although I am close to the end of this for Simon. What I do think is hugely important. I guess most of the people in the room, or many of the people in the room, are customers of HPD. And I've always been very keen to welcome new customers of HPD. Over the years, Kevin's asked me to speak to a number of new customers or potential customers, share with them what we do, share with them how we do it, and I've always been very, very happy to do that. And sometimes people have said, well, isn't that a bit odd that you're sharing with people the way you do things? My view on life is that's not odd at all. What we do isn't unique. We don't have any technology that's unique to anybody or anything, frankly. My view is that the more people we get doing this, that's how the industry grows. But much more importantly, the more people we get using HPD's system, from a personal point of view, the more money, the more revenue is going to go into HPD's coffers, the more money and revenue they're going to spend on R&D, which helps us drive this thing forward. Because I need that, right? The industry needs that. I need this partner. So as everybody in here who's a customer, I was delighted to hear Andrea's presentation earlier about the roadmap for HPD and where they're going and where the business is going. Some fantastic developments on there. But I'd encourage all of the customers of HPD to get on their backs. Get on their backs. We've got to push the envelope, and we need these guys to push the envelope hard with us, as I know they will. So, for me, the future hopefully still belongs to those who see the possibilities before they become obvious. And thank you for listening, and hand back to Simon.